Hi everybody, earnings is key. You want to find rising share prices backed up by rising earnings, then you're onto a winner. If you're picking on stocks where earnings are falling but the share price is going up, you're playing with fire. All right, before we get going today, let's check in on our license numbers. In addition, please note, general advice only. I cannot take into account your personal financial circumstances. As always, past performance is no guarantee of future results. Right, let's get right into it. I'm going to cut straight to the chase. What I've done here in VectorVest is I've said to VectorVest, go and find me companies where our 12-month leading forecast on earnings, that being EPS. So this EPS will not agree with your broker because it takes into account historic, current, and forecasted earnings. So the 12-month leading forecast in earnings over the last 52 weeks is up 40%. The earnings over the last 4 weeks, the forecast earnings is up 10%, and price over the last 4 weeks is up 10%. So I'm finding companies that are currently moving up in price that are backed up with some pretty solid earnings. And what I'll do, just for argument's sake here, I'll just graph the first three. I'm going to go and show you how it looks. So if I'm looking to buy a company, I want to make sure that the earnings is going up. This is being backed up by the share price. All right. I don't want to be buying into a company where, the price is going up. Sure, maybe short term that would be a great benefit, but where I'm seeing the earnings falling away, because sure as day, falling earnings, falling share price. And if I go back in time, you can see here, for example, all right, this company doesn't go back too far, but have a look over here. Earnings were falling. What's happening to the share price? The share price is falling here. Earnings turns around. What happens to the share price? It starts turning around. There it has a bit of a dip. Then it starts rocketing back up again, and here we are in the current cycle. So pick on those companies with a rising set of earnings, not historical earnings, forecasted earnings. And I don't know anybody else that does it here in Australia. We give you a 12-month leading forecast on those earnings. Next one here, PLT, Plenty Group Limited. Look at this. Great. The earnings there, a little bit sort of flat, and then they picked up here was the bump up. Up it goes, and up goes the price. It took a while at 87 cents. Now it's shot up to over $1. All right, you pull it back here. You can see this was the turnaround. All right, so things were bouncing around. Then the earnings started to bump up. And since then, you can see, although it's been a bit up and down, you can see effectively that the price has started to move. Now, this is an interesting one here. Catapult. Although the earnings have not gone above zero or just broken, just on, I think currently just on zero, it's becoming less and less negative. All right, so if you're more of an aggressive investor, then something like this, where you're seeing the earnings getting less and less negative, they start turning around and it looks like it's just about to break above the zero mark and keep growing, then that can provide, certainly can provide a very explosive potential for you. Okay, I'll leave you with one last one here, just out of interest. I run weekly Q&As for the VectorVest subscribers, and if you're a subscriber, then you know all about this one here. Look at the earnings profile on Pro Medicus. Over the years, just turn off the price, you just look at the earnings profile. Over the last 8 years, look at that, absolute textbook. So no surprises there for seeing that, the share price went from, what was it, $5 over there, $5 to over $320 today. This is the key. You've got to get the engine room working in your favor. If you're picking on stocks where the earnings is falling, then watch out. And for those of you in retirement, we all know about BHP. A lot of non-retiree investors also, of course, buy into BHP. Not everyone just simply buys it for dividends and or franking credits. We certainly enjoyed buying this during the mining boom. Let me just clear all the drawings here. And you can see here, look, where the mining boom took place. The earnings picked up. Rising earnings, rising share price. Here, in recent times, look what's been happening. Falling earnings, falling share price. So the technique I'm showing you is not just for, sort of mid-cap type stocks. It's also, use it for any type of stock. Blue chips, you name it. CBA. Another great example here in recent times. Let's just clear all the drawings. You can see we do a lot of analysis each week on our stocks. But here you can see earnings were declining, right? Declining earnings, yet price was going up. So at that point there was a warning, just be careful, earnings are falling, yet price is going up. But then, as it turned out, earnings turned around, so it looks like investors were happy to buy in on the anticipation that earnings were about to turn around. Now, that's not always the case, so just be very careful about buying into companies with falling earnings. This is what you want, rising earnings, rising share prices. Hope you got a lot out of the short presentation. Until next time, bye for now.